please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, so we was referring to some FI numbers. Cameron Brandt of EPFR Global now joins us on the phone line. Cameron, good morning. So we've seen quite a bit of outflows from emerging markets. You know, a lot of parallels are being drawn between this year and 2008. Would that be a fair comparison?
We've certainly seen quite a bit of selling in recent weeks, and certainly pardon me, an exodus from the emerging markets equity funds that we track. But it's still in a relatively early stage, and frankly, I was a bit surprised it didn't start earlier, given the noises about, you know, trade that have been with us for some time, and the Fed's very clear signals that it was going to keep raising rates, certainly into next year. So in some ways, it's a little early for comparisons. You know, it's definitely not anywhere near the scale and intensity we saw in 2013-14 when the taper tantrum was at full bore. And it's somewhat different from recent sort of downturns and flows in that most of those have been tied to fears that China was coming in for a hard landing. This go-around, China seems to be actually viewed as something of a safe haven.
That's true, Cameron. Good morning. In fact, I was coming to that because a lot of funds are shifting their money to China from other emerging markets. Is that something that you're seeing as well? And in general, do you expect these outflows from GEM funds to continue? I mean, we've seen about almost $2.5 billion of outflows just in the last 1 week.
Right. Well, I'm certainly expecting another week of them based on what I've been seeing so far. And yes, we've certainly been seeing a rotation to China. The average GEM fund allocation to China recently hit yet another record high. And it's not just the fund managers. Investors have been steadily pumping money into China equity funds and recently into China bond funds. Even though there are some bankruptcy concerns hanging over the Chinese debt market. So, yeah, it's certainly being viewed no longer as the big risk factor, but as something of sort of an island of stability in a fairly sort of shaky overall picture.
Cameron, when it comes to India and the few India-dedicated funds that are out there, or at least ETFs that have a significant exposure to India, how do you compare today's picture with what was happening during the peak of the taper tantrum back in 2013? And it's interesting that bonds are seeing such an outflow in India, despite, you know, this country is offering a very attractive yield of 8%.
Right. Well, in terms of the comparison with the taper tantrum, India and India funds were somewhat buffered at points by the hopes for the Modi's election, whereas this time around, until recently, there's been something kind of I would almost call it kind of Modi fatigue. What have you done for me lately? And we were seeing fairly consistent outflows from dedicated India equity funds. Those actually, at least this week, seem to have checked. I think people are beginning to feel they might have overdone it. On the bond fund side, I think it's partly that people had pumped so much money into those funds. Certainly the ones we track enjoyed record-setting inflows in both 2016 and 17. So there's a certain amount of adjusting positions in light of the somewhat less stable picture, both for emerging markets and for the global growth story as a whole.
Sure. So how do you expect this to pan out then? Do you expect outflows to continue only from emerging market funds, or do you see money move out of U.S. funds as well? Is it like, sort of large-scale move to cash maybe for the rest of the year?
That's a good question. Until this week, what we had certainly been seeing a rotation towards U.S. assets, which was given a bit of a bump by the rather stellar growth that is expected to growth numbers that everyone's expecting for the second quarter here. But even within the U.S. flows, we were definitely starting to see a rotation away from the large cap funds, where the names that they tend to invest in have much more exposure to international trade than do the small cap stocks that those funds invest in. The U.S. is, at least at the moment, and in a very short-term sense, the most attractive market if you're just looking at growth and profit growth. What I expect for the summer actually is to see more outflows from the GEM funds. I think investors are worried enough about the overall picture for emerging markets that they don't want to just be caught with blanket exposure. But I'm certainly seeing, selective interest in markets, especially markets, and this is something you'll have heard from me before, markets with a credible reform story, or markets with a credible reform story. In percentage of flows as a percentage of assets under management, Saudi Arabia equity funds have been the standout country fund group this year, with investors sort of piling into that reform story. Interestingly, even Mexico and Brazil equity funds have managed to take in money more often than not huge amounts of it, but they haven't seen the kind of sell-off that you might expect given what GEM funds have been going through. And again, this is tied to the fact that investors are very hungry for any kind of reform story. And